Hello, it's still the 12th of June 2017, and this is for a monthly close video. By monthly close, I mean it's effectively a review of May, and I want to share my key top 10 tips or my feedback which I've got from May. Okay, so the reason I got this photo up here on the desktop is that really I need a beer to have this. Now, I did think about not doing a video for this and just kind of publishing it as a page because it's not up. But I thought, yeah, I might as well share my experiences with people. That's the whole point. Is this supposed to be like raw, the real deal, no bullshit, not hiding anything? So I need a beer to get through it. I'm not really going to have a beer, but that was the idea anyway. I like to have something on the screen to make it look like a different video. Anyway, let's get this moving as quick as possible. So, for May, I lost £86, which is 0.86% on my account in May. So not great. I'm now still rolling around this minus 5.88. I just can't get out of this kind of wedge at the moment. You know, I have had some decent trades. That was back before May. This isn't May, by the way. This is all of 2017. But there are some key tips in here which are really important. Okay. Let me just close that out. So the biggest one I've learned on here, and it's a bit sickening to look at it. Let's do before we do that. Yeah, but I mean let's look. So I've got 10 trades in total. I had 30% winners and 70% losers. You could argue that the two of the winners were kind of break-even trades of £1 and £4, but then you could do the same with this kind of -6 and -2. So I'm happy with my own mind to keep it around that level. You know, I only actually need 30% winners as long as some of my winners run. Now, again, trying to look at the positives, you know, I did have this, my winner that was decent is bigger than any of my losses, yeah, which is exactly what you want. The issue at the moment is that I'm just not seeing enough of those. But now we got onto the learning points. Now, number one, and that actually relates to this biggest winner. So let me just open it up, and I'm kicking myself here because I know better. I got caught with a weak moment, kind of emotionally maybe, or I had a weak trading moment, and as I did it, I knew I shouldn't be doing it, and I knew. And it's pissed me off, quite frankly. But it's my own fault, right? I'm totally responsible for this. I mean, I should have another one here, learning points. Remember that I'm completely responsible for my own trades. And I'm cool with that, yeah? You know, I don't actually need to write that down because I know that. Which is why I'm feeling a bit gutted about it. So I'm not blaming anyone else here. So this trade, I originally set it up here, like here. So I was going short here. I was nicely levered up on using my mean trader version. So in previous days I would have put my stop up here, but I put my stop down and I got some great gearing behind this. So this trade was really loaded up, which is good. I mean, within risk tolerances, yeah, there was never would have been more than 1/4%, or was I doing 0.5% there? 1/4%. So I never risked more than 1/4%, but my stop's in tight, so obviously I can get a bit more weight behind it. So the trade does well. I then managed to get that bit to break even, and I get another order at position in here. So you can see here's my first one, break even, and the same thing happens again, basically. Okay, I'm getting short, and I'm levered up again, not risking over 0.25. At which point I wanted to let this guy run. Okay, now somehow, and you can see where I've got two limits here for each of these trades. So one was around this, I don't know what level it is. I can't really see it. One's above, you know, 1.138, and one, what's that? 141, let's call it. Now around this level here, I got, and again, this is my responsibility. I mentioned this before in this trade, but I got a message from someone saying, "Oh yeah, pound doesn't look great, Jappy." Someone else was shorting this for another reason. They said, I'm getting out of this trade. And it's someone that I fully trust. And for some reason, I went and closed it. And I'm not, they had their reasons, but I should have my own reasons, right? and my reason was only that somebody else was getting out. And if I go for that, use that, I'm dead. So some people take this as a key learning point. We all know it, but just to kind of hammer it home, never just close or do anything because anyone else suggests it. And I'm good at this stuff. I don't get caught up with this crap, yeah, but I did. Weak moment, and to be honest, that has potential. This one trade I'll show you in a minute could have sorted out my entire year, because as you can see, where I got out was here, right, and I made 0.44%, which made it my biggest trade in this period. Not big, but you know, biggest. And that was getting out there. Sorry, here. Okay. So what price did I get out at? 144. Let's call it 145 there. Okay. Now, this is why I'm going to show you how I get, because I was heavily geared up on that trade. So my entry was really good. What I didn't do was the final bit of execution. I had 2 entries which were good, and I consider the second entry. I know entries aren't all that, but the way that I'd executed on it was pretty good. Heavily loaded, but without risking too much. Now, look what this bastard's done. GBP Jappy. I got out, what did I say? I got out 144. I got out here. And we're down here. My first target was about here, which would have been closed out, and I'm nearly at the next one. Okay, and looking at that trade, that's trading it the way I trade it. The only way I might not have got out of it, looking back, is if I brought my stop in too much. Well, I don't know what's going on with this line, but too much here. I might have got clipped out there. If I hadn't, I should still be alive in this sucker, and it's upsetting. It's a strong learning point, because that's what I'm looking for. And I had the opportunity to execute on it, and I haven't, because I got kind of caught up. So anyway, there's a free bit of advice for you. That trade there could have set me flat for the year. I can't work it out, but I genuinely think I probably would have had something like 3 or 4% at least in that trade as it currently stands. So yeah. Now, don't get me wrong, you know, you can argue that this has only happened because of the news announcements. This is only, because of Brexit, the Theresa May and all that nonsense with politicians I can't bear to even think about. And I mean across all fronts. So you could argue it could have gone the other way. But I mean, looking at that, that's a textbook kind of short. And if I played it correctly, whatever. So flipping that on its head, I drill it back into my psyche, never let that happen again, okay? And that's what I've got to keep doing, and I've got to kind of keep hammering that in. So that's where, relating to that, that's where trading becomes awkward, because it's like you want to be surrounded by a support network that helps you out, but what you can't have is that support network making any impact on something you're doing on a kind of trade level. Fine, have suggestions from people, take them on board, but you've got to evaluate it your own way, okay? So that's that. So that was my biggest learning point, and again, I didn't want to hide behind it. That is there for all to see. So even though my biggest trade was, biggest winner was the only winner, and it was good that it was positive, it should have been a lot bigger. So there you go. The other ones are kind of minors points towards this. So I'm saying, do use pullbacks to get in on a trade. So using this as an example, do wait for the market to come back and then get in to go short. Okay. So pretend this first position wasn't on. This had dropped south. A pullback to around this 145 would be a good value place to get in and get short. As you can see over here, I can have my stop in pretty tight. Because if it gets up here, the trade's probably invalidated. So I use the pullback and get high value because my stop's small for it to go south. Okay, so I do want to use things like that, and I really recommend that. Now, adding to positions on pullback. So this is a tricky one, because this is down to it's situation specific. So I'd got short here, and I used this pullback to get in on a second position because this one was at break even. Now, on another trade, I did exactly the same thing, and it went against me, and I lost 0.25%. Whereas you could argue that if I just got to break even, I would have been out for zero. So I've said that it needs to be done with caution, the second entry. So ideally, I want to pull back. I want the market to pull back, but not just clip me straight in. I kind of want to get underneath it, so at least I know it falls into it a bit. Yeah, I've talked about that before. So not just a direct pullback, but again, it's going to be situation specific. But it's a note here. Like when I originally wrote the note, I said, right, I'm not going to do this because it's slightly higher risk. Then I saw that my biggest trade actually relied upon it. So there you go. Use with caution is what I take out of that. Don't squeeze a trade. Yeah, this was an annoying thing. So this is again relating to stops. So whilst I've been saying that my stops can be tighter for entries, I think once we're running, I don't want to squeeze them. So here, as an example, say I had been squeezing this trade, I probably would have got, I could have got quite easily got clipped out there because I was squeezing it, and then I missed out on this. Again, you know, if I was just doing the 8 EMA, I could have said, well, that's, you know, I put that there and then I got clipped out of there. So I don't actually want to squeeze my stops once I'm in. I want to kind of get in, wriggle in, use tight stops, get them to break even, then let it run. Okay, that which is, you know, which is my whole trading philosophy, which I need to get, you know, I need to get back on side of that. So the reason I had that one was because a very blatant move on the. So I was trading this long down here. Where are we? Can I move across? Yeah. So I don't know what I'm doing here. I've lost my bit. Okay. So I was trading this long, coming up here, and I got clipped out here. Now I should have realised that if I'd just hidden behind this level here, this 1560, I could have stayed in it and gone a bit longer, and I probably then would have got out. Well, I argue if I'd hidden behind that 50, I would have got to there, and then, yeah, I probably would have got taken out there, I think. So anyway, a lot of profit I left there. Again, these are things I know. But I want to share this with you. I know it's very difficult. It's very different knowing what to do and then actually 100% doing it every time, because the situations are a little bit different. And you get that kind of emotion thing going on. But yeah, so I'm just trying to share these points as honestly as I can, really. What was I going to say? Can't remember, so let's leave it. Yeah, so I mentioned MTA. Oh yeah, fundamental bias. Now this is one that's been pinching me quite a lot over the years. So this is coming from a Jappy 225 trade. So in my little brain somewhere, I still think that in the equities are overvalued, and I think that metals are undervalued. And I think because of that, it gives me a little bit of trading bias to take longs in one instance and shorts in the other over the other. So that's something I need to not need to iron out. I'm aware of. So I need to not let that change me. And I have been aware of this for some time. Again, I'm just sharing it as a point for you guys to have a look at. Incidentally, I've just spotted that would have been a lovely 2-hour trade on the silver here, if you're into that sort of thing. So that's that really. So monthly 0.8 down, not great. I don't consider that a massive loss, but the problem is that I'm not seeing the bigger winners. So I'm just going to keep plugging away. You know, that's the beauty of doing this as a secondary or even tertiary thing. You know, I've got my day job that pays for it. I'm trying to set up businesses on the side that'll give me money. You know, and I'm doing investment stuff as well. So this is all good. I'm in a good position here. I don't have any stress around it, other than just coming to come on here and show to you lot that I've been getting kicked in the head a few times. But you know, there should be value in that for you guys as well. That's the aim. Anyway, I'll leave you there. That's May. I'm going to, instead of doing a weekly review each week, I'm going to do a monthly one each month, just because I noticed that weekly doesn't really mean anything. You know, one week I'm up 30 quid, next minute I'm down 30 quid. You can't really see what's going on that well. And also it means that I can do the weekly one a bit quicker, which suits me better. But this is a better thing, and I'm going to try and add my key learning points with it and share them with you as well. So anyway, like the post on YouTube, like it on Facebook. If there's any help at all, leave me a comment. It'd be great. Let me know how you're doing. I really hope you got some value out of this video. I feel like I did just by doing it. So there you go. Keep rocking on. Keep trading well. Trade safe. Don't over leverage. Let them run. I'll speak to you soon. Live the dream. Get a yacht as well.